Sunday, June 22nd. Market analysis, Stan Ehrlich. I'm going to recap last week. And of course, I'm aware of the Iranian situation, but I'm a technician, and let's see how the market responds this afternoon and, of course, tomorrow morning. At the moment, what we have is and it's 11:19 a.m. California time. We have a market that has started to roll over like I was expecting and talked about before I was with family last week. So we have some minor intermediate new lows and new low closes in the stock indexes, which I always start out with. And then I go to futures, and I have removed hogs and cattle. I will not be analyzing those two markets and the four securities that I've been working with for a few months. So the new lows in the indexes, they didn't stay below previous lows and bounce back. Usually that is a bullish or friendly indication that support has held and it popped back. But that doesn't mean support cannot be broken. And we, again, will see what happens when the markets reopen this afternoon, California time, due to the political situation. Now, looks like it's going to continue lower in general. I talked about being overbought. I talked about the market in resistance areas, basically back November, December, January, February price ranges. And it appears that has begun during last week for the most part, even with an attempt to make new highs and strong closes, which appears to be on Tuesday. That didn't hold. And Wednesday, Thursday, Friday was lower, 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 with Friday poking at new lows, but not staying there. So neutral to bearish, but definitely rolling over, in my opinion. So what have we got? Support areas below the market, 58, 55, up to about 5,900 for the E-mini. Below that, there's an old gap to close from a month and a half ago. Below that, there's another very significant support area at 56.62. Now, any and all of these could still be challenged very easily and quickly due to the, again, political situation. So be on your toes, definitely. And we're looking at the 5-minute chart in this case. I've moved from 1 minute to 5 minutes to give you a bigger perspective with a lot of accuracy for the last 2-3 weeks or so worth of time frame. Higher highs on the way up, but we started to make those lower lows, and now we have seen last Thursday lower lows again, but not staying there. What about the spider? As you would expect, it's extremely similar, except it did come down a lot lower when it finally closed on Friday. And that is a new low and a closing below previous lows for the last approximate 10 days or so, a couple of weeks, let's call it, after being overbought. Whenever I turn yellow on the way up, you're overbought. Yellow on the way down is oversold. It's a warning that the market is likely to be topping out or bottoming out relatively soon, but not necessarily how quickly and not necessarily at what price, just too much strength too quick in general. So I am expecting a test of the support area at 584 ish and 580 to be tested pretty quickly, and that may be very quickly. So the next thing is a large gap to close that needs to get down to 567.5, and then you have various support levels on the way down. The really important longer term one, I believe, to be around 552 and 550-ish. Next, you simply have the 5-minute chart. As you can see, it started to make new lows for approximately a couple of weeks. Looks like it's going to continue. Next, we've got a bearish engulfing on Friday for the QQQ. It is not overbought within the allotted previous number of days, so that we don't have a red bearish engulfing sell signal. Although we had a couple on the way up, and I keep telling you that these signals are not necessarily the lowest low, which I love, and built this to show you that they can pick the major highs and lows, minor highs and lows as well. And when they make mistakes, it is not a large loss. We keep a very tight stop and a trailing one at that, which is not being shown. Only the basic ER signals, red and green bars, are being displayed. So, bearish engulfing, not red, close, not quite, but I believe a sell signal and on the way down to these support areas, 505, and a few, because of different reasons, down to about 492, hair under. Finally closes an older gap from another month and a half or so ago, and other support areas below that, which could be challenged awfully quickly. We'll see what happens. Next, the 5-minute chart on the QQQ. As you can see, it looks to me like it's rolling over and starting to chew away at support and get weaker, faster, quicker, probably. I think, my opinion. Next, NASDAQ in a resistance area, got overbought just before I had left for last week, and now almost new low closes and making new lows again like these other indexes. So I'm looking for these various support levels to be challenged on the way down. By the way, there's a chance I could do another recording this afternoon. I don't know, depending upon the way the market reacts to the quote-unquote political situation. So NASDAQ, bearish engulfing on Friday. Here it comes. Next, the 5-minute chart on the NASDAQ, NQ, starting to poke away at support levels and starting to chip away at them. Next, we've got the YM, Dow, a new low for more than a couple of weeks. Let's call it a month. And almost, or maybe it did have a new low close for about 10 days or so, but it's still hanging in there by a thread at support. So if it drops sharply and stays down, we're going to look at support areas to potentially bounce off of, and we're not too far away at 40-ish from oversold, which again, from my customized RSI, overbought 75 and oversold is 25. All right. And those are not real strict, rules, except for the signals. Then it's necessity, exact mathematics. So generally speaking, anything in that ballpark is considered to be oversold, overbought. Now, here we go with the 5-minute chart on the YM, chewing away at that support area, dropping off the new lows, looking bearish. We have an engulfing on the Russell, but it looks like it closed barely higher on Friday, or right around unchanged, but maybe a tick or two higher. So I'm going to call it neutral. Nothing particularly decisive about it unless you're extremely strict on your numbers and stuff, but I'm going to give it a neutral. Bouncing off some support. I don't think it's going to hold. It looks like the overbought condition poking against resistance on the 11th of June. Stopped it, of course, and I think we're going to see those lows broken. Next, we're going to see Russell 5-minute chart chewing away at support or bouncing off of it at the moment. Okay, bonds. Couldn't decide what to do. Higher highs, very poor close, bearish engulfing Monday of last week. Came down just a little bit Tuesday, bounced back into the same range Wednesday, Thursday, Friday. Not very decisive. Not at resistance or support in particular. Not overbought or oversold. It appears the bigger picture here is the double bottom formation, the low which was on January 14th, and a bullish engulfing ER buy signal smack dab at the bottom, had held again, oversold conditions on May 22nd. So we are still stair-stepping our way slowly up in bonds, in my opinion, up to the next resistance area. 10-year notes, almost exactly the same story. Not quite the same reversals, but support levels, various levels, holding, pushing at resistance, not successfully so far. We need to close in this resistance area of 111. Let's call it 112 almost, not quite. And above previous rally highs, and probably on the same day above the resistance level as well, which would be a 111 and a half-ish. Closing above there, we should be on our way up even more. Excuse me, but it might take a little effort. Next, very overbought conditions, extreme bloody murder scream, 93. Anytime I get up to 90-ish or higher, I start talking about a top. And very quickly and very close in price as well. So early last week, we got there. And as a matter of fact, at the rally high on Friday the 13th. So Monday, couldn't make a new high. Very overbought still. Tuesday, Wednesday, Thursday, tried to do it again, closed poorly, still a hair higher, and Friday did nothing. I think this is rolling over and going to be coming back down to the major support area at 64 and a quarter-ish for crude oil. Now we've got a bearish engulfing ER sell signal, great, on Friday last week for natural gas. Now, I've also noticed because of this rally and where it got to, as well as the bearish engulfing, that you could call this a last shoulder high on Friday. I was expecting a slightly smaller time frame-wise pattern to develop and disappointed that this break on May 29th did not produce a bearish breakout. Instead, it rallied for a week. And it came down again to about the same levels and bounced off of it. But the fact that we are having a bearish engulfing at resistance, ER sell signal on Friday, not making higher highs than the previous shoulder, allows me to take a look at the time frame from Friday to the highest high. You know, it's only a one-day difference to go all the way over to the high, which is a bearish engulfing also for what now I think is the first shoulder on November 22nd of a pattern that was very similar to the slightly smaller double shoulder. A little head and shoulder top is the head of the formation. That can't change. That's only history now. And then a wider shoulder now. The neckline I have drawn in produces a slightly more bearish, deeper vertical measurement. And now the minimum downside objective, you take this from the highest high of the neckline measurement and put it in, let's say, a few days from now or a week or so. The downside measurement is now for a minimum downside objective of almost 1.05. Almost exactly 1. Wow. Very, very bearish. Yeah, could even be 1, whatever. For this pattern. This is it. Protective buy stop should, in my opinion, be a little above Friday's high. Going short, hopefully, higher than where it closed on Friday would be, I think, a good idea. We'll see how this develops, that's for sure. Now we have the heating oil extreme overbought conditions as well. Look at this, 93. So, what can I say? I think it's topping out. Thursday was a spike high into resistance. I think it's going to come back to support. And that would be back down to at least probably 2.38. Another significant support level, 2.33. And also a little bit lower. Let's drop this down slightly. And I should have actually dropped this down slightly. These need to be a minor adjustments because of the rollover from one contract month to the other last week. Yeah, that looks all good. So these levels on the way down. But damn good support, starting, generally speaking, at 2.38 down to 2.3. So I'm a technical downside correction and a probable longer-term bull trend because of lots of historical resistance being overcome. These are new highs last week ever since a year ago, over a year ago. Next, gold. Stopped at resistance last week, early on Monday, right against the previous high. Had been in a downward slanting channel, which is a bullish pattern. Support was holding relatively well. I think there's a chance you could dip back down to the support level again, maybe 32.28. But there are various levels on the way down for it to hold. I do not like the fact that it has been unable to make higher highs and higher closes above the old highs. So this is now developing a big sideways situation maybe. Silver, overbought and very much so. in the last couple of 3 weeks. Got up to 85, then it tried to make another one to 82 and a third. While prices made new highs, the indicator did not. That's divergence. We just made on Friday a slight lower low for the last couple of weeks, but the close is also below all previous closes for the last couple of weeks, not quite below the previous lows, which I think is about to happen. So I'm looking for a new dip low here at 33.65 and maybe even a bit lower than that. We've got platinum overbought also. Everything I've said about the metals looks like it's going to slip. We had a bearish engulfing that did not work for the highest high on June 13th. So last week, that was a doji the next business day, which was Monday of last week. Tuesday up. Wednesday, it actually made a new high with a new high close, but got overbought again. Then we had a poor close after a new high on Thursday, a little bit bearish, and dropped a little bit on Friday. I think it's in the process of rolling over, topping out, and probably dropping down quite a bit. I would expect this to come down to 1165, 1150, maybe even lower pretty quickly. Next, we've got major historical resistance still keeping this high-grade copper from making new highs on a closing basis as well. Got overbought, dropped off, bounced very feebly, almost to resistance. I think it's going to slip and make new lows again on a break. Let's go to grains. Very, very interesting situation in the grain markets last week. We're coming closer and closer to soybeans having an intermediate breakout to the upside. I should make that a little bit flatter, not that big a deal. So the bearish engulfing on Friday says, we're going to stop rallying and drop back down a little bit. It's not normally super bearish. It did not get overbought. It would have turned red if we had an RSI high above or equal to or above 75, which didn't quite happen. So I'm going to add a touch more bearishness to this bearish engulfing on Friday. So I think we're going to dip back down at least and quickly to 1053. And I'm kind of expecting now it to come down to, say, 1028 area. Maybe a little bit higher. Maybe I should adjust that upwards slightly like that. That fits just fine, one way or the other. Adequate. Yeah, it's in the zone. All right. What about soybean oil? Now, that is an official bearish engulfing ER sell signal. Brand new on Friday. It means that this upside breakout, which happened while I was gone, and a classic huge rally up on 6/16, Monday of last week, maintains strength basically on Tuesday and Wednesday, but Friday, the market had that bearish engulfing. So wait a minute. Yeah, I'm off by a day. Yeah, that's right. Okay, 16, 17, 18, 19. Oh, that's 20. Okay, good. Oh, I see. It wasn't open on the 19th. That's right. Teeny day. So, bearish engulfing Friday. That's it. Short term. Let's come back to the breakout levels. Probably at a minimum, closing this huge classic bullish breakout around 50.77. But minor problem with that is it's a little bit below the neckline. And I am going to call this a complex head and shoulder bottom. I probably should put my markers back in again, which I will do for Monday morning. New market analysis, YouTube. So short-term downside correction, close gap, test neckline. Next, we see that there's a reason to believe meal could start to rally because of the oversold developments last week, and fairly substantially so. Below 10, ice cream bloody murder, but it went down to 16, 15-ish, which is pretty darn low. And look what happens usually when it gets that low. It bottomed out for a good rally for a week or so. It bottomed out again for a very good rally. It bottomed out for a couple of days, not so good, but a little bit of a bounce again when it got down to approximately 10 to 15-ish. So the likelihood is pretty high that it's going to bounce along with the rest of grains in general next week. Next, we're at support, failing to break out to the downside in corn. We're not oversold. We were. We had a bullish engulfing, didn't work, but it's in the realm of where it's trying to bottom out. So I think that's it. We're trying to bottom out at support. Nothing special about the action last week, except that support held. And I'm voting for a bit of a rally. I don't have much technical evidence of that at the moment, but I need to close above 439 and 3/4 to get the ball rolling. Now, wheat has already done that. Wheat has rallied up to and closed above on Thursday of last week, recent rally highs for the last couple of months. Not bad. Going back all the way to, in fact, March 25th, 3 months. So, will we be able to break through on the upside the resistance, which is now in, and it looks like stalling out with a little tiny reversal on Friday, not meaning too much to me. It held its support on the dip lows. So at any time, I think this is going to turn back up, push through resistance, and keep on going. Again, I've got some decent bullish stories to tell in grains. That's what I've been trying to do for a long, long time. And until this rally last week in general developed, couldn't support that. Skipping hogs and cattle, going to the right away shell. We had a bearish engulfing sell signal on Monday. Let's see. Yep, it was not open on Thursday of last week. Friday, we have a new high, but a poor close below the previous rally highs. So I think it's going to start dipping back down. We've got gaps to close at lower levels. We've got support levels for it to hold at lower levels. So I'm thinking it's going to come down to at least 68.50 and very possibly 67. Look at the Apple chart. The resistance line has stopped the rally a couple of weeks ago. I think it might do the same thing again. Support could very easily be challenged at 193. If broken, 193.40. If it's broken, then we could easily drop all the way back down to the area of about a little below 170. What have we got for Tesla? Unable to break through some minor resistance in the last week or so. Poor close on Friday. Nothing special. You could call us a little bit of a sideways trading range or channel or something, but nothing particularly great. There is a small gap to close at 309, 07, 309.20-ish, whatever. Then we've got support levels at lower levels to consider. So that would be 280. I wouldn't be surprised. I'm just waiting for an upside or downside breakout at the moment. The longer term picture is a major support held at 212. Attempts to make lower lows failed, and they held at higher levels until finally overbought, started to work its way down, held at a reasonable support level. We're kind of getting caught between a rock and a hard spot. So I'm basically looking for 280. Next, we topped out in overbought conditions. Carvana. Too bad that wasn't a bearish engulfing. It would have turned red. It came close, but nope, not quite. Dropped off sharply, had a big gap down. That gap is closed on Friday. Gaps are almost always closed. They're like a black hole in space. They tend to suck the market back into the gap area. And that's exactly, come on. What happened? That's good. On Friday. So that's done. Not overbought, not oversold. Kind of getting caught between a rock and a hard spot a little bit here. We do have a gap to close at lower levels, though. Don't forget about 263. So if it starts slipping, 263 is not at all out of the question. And let's go back to the mini. Of course, it's not trading at the moment. You guys have a great weekend. Profitable trading to you.